Okay, hi guys. Just a quick update to let you guys know what I'm looking at going into the weekend. It's Friday, so I'm probably going to be taking some time off the charts. Before we do that, though, don't forget we've got boot camp coming up last Sunday of each month. So that will take place on the last Sunday of May, and we've also got Discord over here. So if you do want to get in touch, if you do want to get involved, feel free to leave me a message here or drop me a message on Discord. And don't forget, we've also got the trade journal. Now, the trade journal is available for any of you who are looking to sort of track your trades, improve as a trader iteratively. And what it does, it basically helps you track your thinking patterns, your thinking framework, and you can document every single trade as well as have a look at your monthly, weekly, yearly equity curve. All right. So let's take a look at the chart. So what were we looking at as of last session? So we said we broke down from that range, and as we broke down from that range, we said we're expecting a retracement back into that zone, and then we said one of our POI is this daily supply we've got here. Now this is a very key level, and this daily supply is kind of like a magnet. Supply and demand zones are like magnets, whereby price will tend to rally back to them to fill orders that have not been filled. And so we use supply and demand to understand and spot where we've got those high volume players stepping into the market. So it's no surprise. Oh, let's see what price has been up to since our last stream. So if we use the bar replay tool, it's no surprise at all that price started to rally up. If we take a look at the 10-minute, price started to rally up. It formed this nice range, and we can see the range here. We've got the range high and the range low. Okay, so as it forms this range, we're first of all seeing, okay, can we get a scalp short from this range? Does it break out from the range, or does it SFP the range with a break in market structure? So as we play this, we see that price rallies up, and it's rallying up, creating nice higher highs and higher lows. So we've got a higher highs and higher lows as price rallies up, and then price does something weird. Okay, it does this. So price actually forms a mini range over here, as we can see. It forms a mini range, but it breaks down from that mini range. Okay, now after this breakdown, what would we normally expect? We would expect a retracement for continuation downwards. But what happened was this is actually a manipulation. So remember yesterday we talked to the PO3 where you've got some sort of accumulation, a manipulation downwards, and a potential expansion, and that's kind of what happened here. So we had accumulation, tiny manipulation, and we had the expansion up. Okay, so let's see, as we play that, as we continue to see what price did, price then rallied up and it broke bullishly out of our range. All right, so what this was simply a rally base rally structure. So what do I mean by that? So we have a rally, we have a base, we have another rally, we have a rally, we have a base, we have another rally. Here we have a rally, we have the base, and we've obviously got another rally. Okay, so the simple continuation play, all right? And if you look at the global market structure, the internal global market structure, we're doing something like this. Okay, but this was a tricky one because I'm sure a lot of people will be thinking, actually, right, this is the prior range extreme, so are we going to get a retracement, and is that the bounce? Okay, but we didn't get a bounce there. So let's see, what did price do after that? So price continued to rally up. At this point, we got a local breaking structure that took us slightly down. You kind of got another PO3, like a failed PO3. Well, not necessarily failed, but incomplete PO3 in the sense that if we consider this as a massive range, a bigger range, the manipulation of our range, and that continuation downward. However, we got a reaction, a continuation play here instead, and that was a juicy one. That was a very pronounced move up. So after we've obviously broken down, I'll be honest with you guys, this was a tricky one to understand, and this was a tricky one not to get caught out, because obviously we did have the internal breaking structure here, and we also kind of had a tiny breaking structure here. So I won't be surprised if some of you did enter that one. However, make sure if you were to have entered that, you would have put your stop loss over here anyway, and you'd have put your stop loss over here anyway, so you should have at least mitigated some of the risk there, even if you were on the wrong side of the market there. So price, don't forget, price will do what it wants. It doesn't have to go up, it doesn't have to go down. These are just higher probability setups. So what do we expect price to do now? We expect it to go to that daily zone, and we are seeing exactly what we expect at that daily zone, in the sense that price has rallied up to this level and price has tagged the level, but not only has it tagged that level, it seems to be ranging in that level. It's distributing in that level. Okay, now this is what I mean by supply and demand. Supply and demand zones, they always work. Okay, not always work, but most of the time they will work. And what we're seeing here is price respecting the zone. If we look on a 5-minute time frame, we've got that rally up. We've got that rally up, setting that first tap. We've got the rally down, setting up the second tap. So I won't be surprised here if we have a nice 3-tap Trinity Model 1 or Model 2. What do I mean by that? So for a Model 1, we want to see a 3rd tap above that prior tap, and a Model 2, we want to see a 3rd tap below that prior tap. Okay, but we do want to see that with a clear change in market structure. So what I would say is that if we do get a change in market structure, an internal change in market structure, then it's definitely worth a shot with this one, because we've got this as a high, and if we consider the market structure as we go back up, we have high, 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 low, high, 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 low, high, 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 low, high, high. Now if we go in terms of our 10-minute structure, we have a clear high and then a low. So if we were to get perhaps maybe an SFP of this level and then come further down, that would be a great signal to enter that short. You look to enter that short there. Okay. Alternatively, if on the 5-minute, let's see what the 5-minute looks like. Well, if on a 5-minute we get a decisive close below that level, so this level here, again, that would be an indication for a potential short there. But I think the best case scenario would actually be if we were to take out this prior high, okay, and then rotate with a nice internal change in market structure there, okay. Now that would be a juicy trade, and then we can just rotate down. Of course, if you want to be more cautious and you're on the apprehensive side, you want to wait for this low to be taken. So for price to do something like that, look to enter that retracement and then go further down. All right. Anyways, that's what the price action has been up to. Well, it is Friday. Usually on weekends, I'll take weekends off. So do remember, make sure when you're trading, you're practicing good risk management. Make sure you're only risking 1% or probably less of your account if you're a beginner. And just make sure that you are managing your trade as you go along. Anyways, I'll leave it there and I will see you on Monday.